What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. So I went live yesterday. It was fun to see you guys on there. I also did a review on MPW. And earlier today, I posted just an intro video for my YouTube channel. So you don't have to check that one out. But check out the MPW video. And again, this channel is not financial advice for entertainment purposes, only disclaimer in the description. So there's a high yield business development company that I am buying less than $10. I'm going to provide my rationales as to why I like these guys. Very risky. So this one, BDCs right now, remember 90% of what they make go back to investors, but it's less than $10. I like the trends. I'll go over that. And they're starting to make a huge comeback. So business development companies are a huge risk. There are monthly dividend business development companies I like Main Street Capital, which check out my video with that at the end of this video, or I'll put it in the right hand corner for you. Actually, I'll do both. So this is very interesting with this company. So I'm going to do a review. You guys recommended it, and I like it a lot, and I'm going in. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this business development company out right now. That stock is Oaktree Specialty Lending Corp. It's sitting at 681. The dividend yield is 9.99%. It has a PE ratio of 23.14. Average volume 722.02K. The market cap is 1.25 billion US dollars. Its year range is 586 to 781. Day range was 677 to 684, and its previous close was 681. So I'm going to show you why I pulled the trigger on these guys. So we're going to do a review on them. So they're a specialty finance company dedicated to providing customized one-stop credit solutions to companies with limited access to public or syndicated capital markets. So this is what I like right here. We invest in companies across a wide variety of industries that typically possess resilient business models with strong underlying fundamentals. We deploy capital across credit and economic cycles with a focus on long-term results, which enables us to build lasting partnerships with financial sponsors and management teams. We are regulated as a business development company, or a BDC, under the Investment Company Act of 1940. So remember, 90% of what they make goes back to investors. That's the same as a real estate investment trust. So let's look a little bit more into these guys. So here's their portfolio summary. 2.6 billion invested in 151 companies, 9.3% weighted average yield on debt investments, 88% of the debt portfolio consisting of floating rate investments. So right here, first lien is 70% of their portfolio composition. Second lien is 17%. Equity is 4%. Unsecured is 2%. And joint ventures is 7%. Their top 10 industries, the biggest one is 15.7% of application software, 4.7% of pharmaceuticals, 4.4% of data processing and outsourced services, 4% of biotechnology, 3.8% of healthcare technology, 3.0% in industrial machinery, 2.8% in internet and direct marketing retail, 2.8% in aerospace and defense, 2.7% in specialized finance, and 2.5% in fertilizers and agriculture chemicals. So there's a few things we need to look into as a company. A little bit more as a business development company. Let's check that out. Oaktree Specialty Lending Corporation offers customized one-stop credit solutions to companies with limited access to public or syndicated capital markets. We seek to partner with financial sponsors and management teams across a wide variety of industries whose companies possess resilient business models with strong underlying fundamentals. Our value proposition to our partners is that they're a trusted partner and financial sponsors and management teams based on long-term commitment and focus on lending across economic cycles, such as delivering value and resources beyond financing. We deliver quick and thoughtful responses. Our team of over 300 investment professionals has extensive experience developing innovative and customized solutions to help companies achieve their financing objectives. And the other thing I like right here is we excel at developing financing solutions for companies with limited access to public or syndicated capital markets. I've said that probably about 4 or 5 times. This is what I like. Now, let's check out the revenue and dividend history. The revenue wise, starting in 2015, this is in millions US dollars, 265, then 2016, 247, then 2017, 177, then 2018, 138, then 2019, 147, then 2020, 143, and then 2021, 209. So this is something that you don't want to throw all eggs in one basket. But with $6, why not throw X amount of dollars and have 100 plus shares and then see what happens in the long run? I'll use my play money with these guys as a dividend stock, especially since they're a business development company, which there's a huge risk investing in BDCs. So I make that very clear. Same with real estate investment trust. So I'm a little bit more aggressive with my dividend portfolio. Now let's check out the recent revenue. So each quarter, their revenue has gone up. In 2021, it beat it by 22.98%. With the EPS, 2022 in the first quarter they won by 12.63%. 2022, they won by 9.85%, and then 2022 in the third quarter, it still won by 1.19%. So the EPS was minus 5.33%. Again, this is a risk, but I'm going to take this risk. Now let's check out their dividend history. We'll start in 2018. It was 9 cents. Then it jumped to 10 cents. It was a little stagnant. You can probably blame the pandemic for that. Then 2020, it jumped to 11 cents. Then 2021, it jumped to 12 cents. Then to 13 cents, to 15 cents, and then to 16 cents. And the recent announcement at 17 cents. So again, a business development company, there's going to be usually a high payout ratio at 97%. Number of dividend increases in the last 5 years is 10. Dividend growth in 5 years is 13.27%. If you bought one share, you made 68 cents with a 9.99% dividend yield. So this one is a risk. I'm just going to be honest with you. Again, this is not financial advice for entertainment purposes, only disclaimer in the description. I love business development companies. I love Hercules Capital. I love Main Street Capital, which I will have at the end of this video. I like many high yield business development companies with solid dividend growth and solid revenue. So I always tell people, when you look at REITs or business development companies, you want to see an increase in revenue, because if the revenue ain't there, there's chances of a dividend cut, which still this could happen if there's a recession. So we have to be careful. We have to be careful with these guys with the price per share, because if things go really sour, could there be a reverse stock split? That's one thing to look at. But again, if you have play money, this is what I'm throwing in to see what happens. I can't confirm if I'm going to be long in these guys. Maybe in about 2 years, I can tell you I'm going to leave them alone, dollar cost average potentially, and just reinvest the dividends. So if I get to 200 or so shares, I'm just going to let it fly and let these guys buy more shares, be in dividend reinvestment, and go from there. So I want to see what you guys think of this business development company as a stock and its potential. So let me know in the comment section. Again, if you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow on another dividend stock that you guys wanted me to review. You guys take care and have a good one.